What's poppin', people? Been a minute since we talked stocks, so that's what we're gonna do today. Specifically, we'll be going over next year's first big IPO, which I think any investor should take a look into, or at least be aware of. You're watching S.Korea, and today we're talking about LG Energy Solution. Now, before we continue, we just like to remind you that this channel is meant for general education purposes only and isn't meant to replace the legal or financial advice from a paid professional. When it comes to investments, it's always healthy to take everything with a fair bit of skepticism regardless of the source, and that includes us. For that reason, nothing we say here should be taken as a basis for investment, and you'll have to do your own work and thinking before deciding whether taking up a position on any stock mentioned here is in your best interest. Want to know how? Well, if you scroll down a tiny bit, hit the like and subscribe buttons, we'll do our best to help you figure out how to figure out this game for yourself. And with that being said, let's get to it. So the big news dropped earlier this month that financial regulators have given LG Energy Solutions, which from now on we'll be calling LGES, or LEGS. I know it's not actually legs, but it's kind of funny. The financial regulators gave them the go-ahead to pursue their IPO plans in the first month of next year. Now, with a market that's getting its ass beat and then going on a little run and then getting its ass beat again, this is bright news for investors in the Kospi and in Korea in general, as there's bound to be intense interest from foreign investors and local institutions for what could potentially be the largest IPO our country has ever seen to date. Now, why is that the case? Well, in a word, batteries. If you were around last year, you'll likely remember seeing LG Chem skyrocket just short of 4x from 273,000 won up to over $1 million per share after the announcement that LG Chem would be a main provider for EV batteries to other pandemic bull Tesla. They also provide batteries to Hyundai Motors, Volkswagen, and GM. Now, these agreements, among others, have catapulted them up more than 20% market share for second place in the EV battery market. Domestically, their main competitors are SK On, who supply EV batteries to Ford and Kia, and rank 5th in the world in terms of market share, and Samsung SDI, who rank 6th, and who have seen a 65% year-on-year growth. Now, at the moment, LEGS is wholly owned by LG Chem after being spun off at the end of 2020, and with its IPO, it looks to expand their share in what is still a relatively young competitive market. Specifically, their main aim is to secure funding for 2 new factories in Ohio and Tennessee in a joint venture with GM, and to also expand their battery production sites in the United States, China, South Korea, Poland, and Indonesia. In addition to these projects, the company has plans to invest another $1.2 trillion in their China operations, where they manufacture cylindrical battery cells for Tesla, another $2.5 in their operations in Poland, where they've already put down $6.8 trillion, and they've also stated intentions to build a battery plant in Indonesia for 1.1 trillion won in cooperation with Hyundai Motor Group. Finally, in October of this year, they struck a preliminary joint venture agreement with US firm Stellantis NV, who make parts for companies like Fiat Chrysler for battery cells and modules in the US, Canada, and Mexico. In addition to this, both LG Chem and LEGS signed a joint agreement with Toronto-based Li-Cycle to secure 20,000 tons of nickel for South Korean companies, while also buying a 2.6% stake in that company. Now, this is all to say, LGES's position as a world leader in the still burgeoning EV battery market and their current and future expansion projects are strong tailwinds leading into January's IPO, during which they hope to raise about 12.75 trillion won. And that brings us to the biggest question of all, is it worth it? Well, as usual, that's pretty much up to you to decide, and it all really depends on how you value the company growing over the next decade and so on. See, both domestic competitors SK On and Samsung SDI are looking to commit trillions of won on their own to expand their own battery operations. Additionally, there are manufacturers in China and the EU who are also in the middle of this competition, so it's definitely important to think about whether or not you think LGES's moat is big enough early on to weather the onslaught of competition both domestically and abroad. Something only you can decide for yourself, but given the state of the market right now and the decades of EVs we can expect to see as major car manufacturers speed up their pivot to electrification, this is an IPO that we think deserves at least a little bit of time in your thought palace. Alright, that was a really quick one. To be honest, I'm just swamped, and I really wish I could be making more videos at a much higher clip, but right now I don't have the time. But we'll be back real quick in the new year, but until then, peace and love to all of you, and a merry non-denominational holiday season. Peace.